Today I'm sharing our November 2025 monthly numbers update. It's going to cover what we have spent, how our investments have performed, and how we're preparing for early retirement as we head into 2026. In case you are new here, my husband and I retired early. I am 53 and he's 55. And we share these monthly updates to show what early retirement actually looks like in real life. Now, these updates do also help keep us intentional, and we hope that they are useful for you as you are thinking through your own plan. Let's start with our spending for November, because this really sets the foundation for everything else. Now, our total spending for the month came in at $1,971.55, which is actually a little lower than what we usually expect, and that is totally okay with us. So to start, we're going to look at our fixed cost. These stay pretty steady from month to month. We have our property tax at $258, home insurance at $250, car insurance at $32, utilities was $160 this month, which is just a little bit higher than usual, and then our trash is $24, internet is $82. We have 2 TV subscriptions at $45, and our phones are $110 right now, and we are planning on switching possibly once our phones are paid off at the end of December. And then we did spend $56 on fuel for our one car. And moving on to variable costs, this is where things naturally move around. Our food was at $462, and that included a dinner that we had for Thanksgiving, which was about $75. And then we have our miscellaneous. It's $492.55. And this month, it really lived up to its name because it included all kinds of things, including the water bill for 3 months was $80. And then we had a furnace part, which is $40.20. So instead of calling someone out, we used YouTube to figure out how to repair and do it ourselves, which saved us a lot of money. And then we had a small project for the house, which was restaining our porch. So the stain itself was $52.41. Again, we did that ourselves to save money. And then we did buy some new sheets at $65 and some clothing for our upcoming trip, which was $68.96, and a new microphone for recording YouTube videos, which was $84.73. And then the last thing is our entertainment. It was a climbing fee that we had to pay for, which was $625, and our drinks for the month was $95. So all in, our November total was $1,971.55. Now, if you are new here, one big reason our expenses stay low is that we don't have a house payment or a car payment. Both of those are paid off. Also, our health insurance isn't included here because it is covered through the end of the year. So starting in 2026, that will become a regular monthly expense, and that will be part of our updates. Now, we're not trying to follow a strict budget. This is simply what we end up spending while living our life. We do like to keep our monthly costs low so that we can spend more money on things that we like travel. And while November did come in a little bit lower than usual, we already know that December will be higher with a few extra expenses coming up, including, Christmas, and that's okay. What matters more to us is how things look over the entire year, not just month by month. I want to take a moment and say thank you to everyone because my channel became monetized in less than 90 days. And as we move forward, we will be sharing YouTube income as part of our monthly numbers. I am truly grateful to everyone. Thanks again. Now let's move on and talk about our investment accounts for November, because this is where we really saw some market volatility. November was a pretty choppy month in the market. So we did see pullbacks across our accounts, but it was nothing alarming, just normal market swings. This is where emotions really have to be taken out of the equation. If you're investing for the long term, months like this are simply part of the process. Let's start with our brokerage account, what we also refer to as our superhero account, and there's a reason for that. So this account does a lot of the heavy lifting for us. It is designed to carry us through our bridge years from early retirement until we eventually turn on Social Security around 2035 or 2037. And at the end of November, this account was sitting at about $392,000, which is down roughly $18,000 from October, entirely due to market volatility. Nothing about our plan has changed. The market just did what markets do. So short-term swings like this don't bother us. They're expected when you're investing for the long term. And our goal is for this superhero account to last about 10 years, giving us flexibility and confidence in early retirement. To explain how the superhero account actually works from day to day, I want to break down how we've structured the cash portion. A really important part of this account is the $120,000 that we keep in SGOV and SCHO. Now, this is money that is meant to be readily available for us, cash that we can easily access and live off during our bridge years. Here's what those funds are in simple terms. SGOV holds short-term U.S. Treasury securities. It behaves a lot like cash, but typically earns more than a money market fund. And SCHO is a short-term bond fund made up of high-quality government and corporate bonds. It's designed to be stable and not swing like stocks. So we used to keep more of this money in SPACs, which worked well when interest rates were higher. As rates came down, the return drifted closer to the 3% range once you figure in the expense ratio. So it made sense to shift into funds paying over 4% while still staying conservative. Now, this $120,000 gives us stability during the volatile markets. It has easy access to cash and the ability to cover our expenses, especially our health insurance, without selling stocks during the down markets. Now, just as a reminder, our target annual spending in early retirement is about $50,000. But our goal is to live well below that whenever possible while still enjoying life and traveling. So flexibility matters to us. Life changes, markets change, and expenses change. Having room in our plan helps us adjust calmly instead of reacting emotionally. We also saw some movement in our retirement account during November. We had a decline of about $130,000 driven entirely by market volatility. And nothing about our long-term strategy has changed. We didn't panic, we didn't sell, and we're not concerned about the short-term swings like this. And having this structure in place is exactly what has allowed us to take advantage of market pullbacks instead of stressing about them. So during several red days in November, my husband invested $82,000 into long-term companies that we believe in. Microsoft, NVIDIA, AMD, Palantir, Amazon, and Meta. These were thoughtful, long-term buys in businesses that we're comfortable holding for many years. We also keep money in our checking account, which makes life a lot easier while we're away. Now, even though we will be traveling the Caribbean for a few months at the beginning of the year, we still have our home and minimum costs here. Having everything automated helps keep things simple. And our daughter, who is a full-time student, she'll be living at home while we're gone, and she'll also be caring for our pet ducks. Keeping things simple during this transition was really intentional. Knowing everything's covered lets us focus on enjoying the next chapter. So as we zoom out and look at November as a whole, it was a really solid month for us. Spending was lower than expected. We stayed calm through the market volatility, and we felt confident about how everything is positioned as we head closer to our first year of early retirement. Now, in our next video, we're doing a full deep dive into our 2026 health insurance coverage. We're using ACA, and we'll walk through what we chose, what it cost, what's covered, and why it works for us in early retirement. Thanks so much for watching our November monthly numbers update. If you'd like to share, let us know in the comments. How did your November look financially? We appreciate you, and we'll see you in the next video.